Welcome back to Father and Son Investing. We're going to talk about Matterport today. The stock price was up significantly. There was really no significant news on the day regarding Matterport. This is just one of those volatility types of things when it comes to growth stocks. Let's get into Matterport and let's talk about what's coming up next week that will be very important for investors to remember and follow. Let's remember that Matterport has almost 4.5 million warrants for the purchase of Class A common stock. Now, when those warrants are exercised, that will generate an additional 11.35 million shares of Class A common stock. Before we get into more detail, I need to just quickly explain warrants. This will be very quick, but I did get a comment on a previous video that I was using terms that people just didn't necessarily understand, so bear with me. All right, put simply, a stock warrant is simply a written certificate that gives the holder the right to purchase, remember that, shares of a stock for a specified price within a specified period of time. So again, purchase a share of stock for a specified price within a specified period of time. So how does this work in the case for Matterport? The specified price is $11.50, and the specified time is that they expire out into 2026. Now, how did people get these warrants? They can be issued for several reasons. Sometimes when a company is selling bonds, they'll also attach warrants to that to make the bond more attractive. In this case, these warrants came about from the merger with Gores Holdings. The people who owned those Gores Holdings stock initially also got some warrants with those purchases. Later, the stock and the warrants became separated from each other, and you could either buy the stock, or you could buy the warrants, or you could buy stock and warrants together. On December 15th, those warrants become exercisable, meaning that if a holder of those warrants chooses to buy Matterport stock, they can buy it for $11.50, regardless of what the current price is on the market, which is right around $26. So what are some features of those warrants? Well, when they are exercised, they will dilute the stock because there will be a rise in total outstanding shares. Warrants can be beneficial both to the company that issues them and to the investor who purchases a warrant. How is it beneficial to the company? Well, they're going to raise capital. Even though they'll be selling their stock at a lower price, in this case it'll be $11.50, they still will be getting $11.50 for every warrant that gets exercised. Additionally, they'll be getting a liability off of their books. Earlier this year, the SEC changed the way that warrants were treated in accounting, and rather than being equity, it was listed as liability. So how does a warrant work for an investor? Well, in this case, the break-even point is 110. Anytime the price of the stock goes above 110, they're making money. And anytime the price of the stock is below 110, they are not necessarily losing money. You obviously wouldn't want to exercise a stock to purchase it for more than it's currently selling on the market. Again, these warrants become exercisable on December 15th in about 8 days. That could potentially bring another 11.35 million shares onto the market. There's no guarantee, though, that a holder of that warrant will want to exercise it yet. The price of the stock has been steadily climbing with little peaks and valleys, and they may be thinking, hey, I'll hold on to this warrant until it's worth even more money to me. Now, there is a caveat here, and that is that the company itself has a right to force people to exercise their warrants. What it states here is the company may redeem the outstanding warrants for cash in whole and not in part upon not less than 30 days prior written notice of redemption. That's called the redemption period, those 30 days. And they would get redeemed at 1 cent per warrant. Now, when can the company force this redemption period to start? It states only if the last reported sale price of the common stock equals $18 per share for any 20 trading days within a 30 trading day period, ending 3 business days before we send the notice of redemption to the public warrant holders. That means potentially December 18th, the company could force this redemption period to start. What does that mean for you? If you're looking at buying Matterport stock, you can expect a dip to occur potentially right around December 15th, depending on how many warrants might get exercised, especially knowing that the company 3 days later can force that redemption period to start. I've had that happen with one of the warrants that I own. I own 23andMe warrants, and recently they put out a notice to say the redemption period has started. It's going to expire, I think, on December 20th. So what will I do in my case? I think I'm just going to sell my warrants and see if someone else will buy them. In that case, I'm going to lose a few dollars, but not as much as I would if I went ahead and purchased the number of shares of 23andMe that I have for warrants. All right, so no fear. If you didn't get to buy Matterport on this most recent dip that occurred yesterday, we see the price has gone up a bit today. Know that you can expect potentially another dip starting December 15th, running out to December 18th, and potentially even farther out into that next January. Of course, I'm expecting another dip on January 18th already, and we'll talk about that on another video. That'll do it for Matterport. We'd love to have you as a subscriber. If this information was helpful, please give us a thumbs up. As always, share this with a young person in your life. Make investing a family affair. And until next time, enjoy your investing.